ADM Energy isn't trying to reinvent oil and gas. It's trying to exploit what most investors overlook: proven assets, existing wells, and paths to cash flow that don't rely on decade-long exploration bets. While many energy stories are built on promises, ADM's story is built on geology, licenses, and infrastructure that already exists. So what exactly is ADM Energy, and why does it matter? ADM Energy is a natural resources investing company focused on oil and gas assets in West Africa, with Nigeria at the center of its strategy. Rather than operating as a traditional exploration company drilling blind, ADM positions itself as an asset investor and portfolio builder. The goal is simple: acquire interest in assets with known reserves, prior investment, and realistic routes to production and revenue. At the core of ADM's existing portfolio are two offshore Nigerian assets: AJ, known as OML 113, and Barracuda, part of OML 141. The AJ field is a multi-reservoir oil, gas, and gas condensate asset located offshore Nigeria. What makes AJ particularly interesting is its geological depth and diversity. The field contains multiple stacked reservoirs across the Turonian, Cenomanian, and Albian sandstone formations. These are not speculative targets. 5 wells have already been drilled at AJ, confirming the presence of hydrocarbons across different zones. That layered reservoir structure gives the field flexibility, both in terms of development strategy and long-term upside. Gas also plays an important role at AJ. In a global energy market increasingly focused on transition fuels, gas assets with existing discoveries are strategically valuable. For ADM, AJ represents a technically proven asset with optionality across oil, gas, and condensate rather than a single commodity bet. Barracuda, located in OML 141, brings a different but complementary profile. The license area covers approximately 1,295 square kilometers in the swamp and shallow waters of the Niger Delta. This is one of the most hydrocarbon-rich regions in Africa, with decades of historical production and infrastructure. Barracuda itself has 4 existing wells already drilled on the swamp oil field in Bayelsa State. Unlike deep offshore projects that require enormous upfront capital, shallow water and swamp assets can often be developed more incrementally. That matters for a company like ADM, whose strategy prioritizes capital efficiency and speed to cash flow. Existing wells, known reservoirs, and proximity to infrastructure all reduce execution risk compared to frontier exploration. Zooming out, ADM Energy's broader strategy is to build a diversified portfolio of oil and gas assets across West Africa. The company actively targets opportunities with clear risk-reward asymmetry. That typically means assets where substantial money has already been spent historically, geological risk has been lowered through drilling, and commercialization is a question of structure and funding rather than discovery. This approach reflects a wider shift in the energy investment landscape. As large majors focus on scale and transition, smaller assets with real production potential are often divested or overlooked. ADM aims to step into that gap, acquiring interest where technical risk is known, but value has not yet been fully unlocked. Leadership and experience also play a critical role in this model. ADM's management team brings a mix of technical, commercial, and strategic expertise across energy, investment, and corporate development. In regions like West Africa, understanding regulatory frameworks, local partnerships, and operational realities can be just as important as understanding the subsurface. It's also worth noting that ADM is not positioning itself as a short-term trading story. Its stated purpose is to build value over time by assembling a portfolio with upside optionality. That means balancing near-term opportunities for cash flow with longer-term development potential across its assets. In an industry often dominated by headline-grabbing discoveries and billion-dollar capex plans, ADM Energy operates in a quieter lane. Its focus is on selective investment, disciplined asset selection, and leveraging what already exists beneath the surface. That doesn't make it risk-free. Oil and gas investing always carries exposure to commodity prices, regulatory environments, and execution challenges. But ADM's strategy is clearly designed to manage those risks by avoiding early-stage exploration and concentrating on assets with proven hydrocarbons and development pathways. In short, ADM Energy is an oil and gas investing company with an aggressive but targeted growth strategy. It's building a portfolio in West Africa anchored by existing Nigerian assets, with the aim of turning geological certainty and historic investment into future value. Thanks for watching Finance Spot. If you found this breakdown useful, make sure to like the video, subscribe to the channel, and turn on notifications for more deep dives in our Stocks Explained series. See you in the next one.